Hello, we're on the sidelines of the full FX Scandinavia. We're getting towards the end of a very interesting day, but I'm delighted to have been joined by John Ho, who is Head of Legal for Financial Markets at Standard Chartered. John, nice to sit down and talk to you because I think you exist in a very interesting world in terms of, so much of what we are developing in terms of market structure has to have some sort of legal basis. So could you maybe kick off by just laying out what the key focuses are around the legal in FX and financial markets more generally?
Yeah, I think one of the key issues with FX right now is relating to reduction of FX settlement risk, which is what we call the Start risk.
Yep.
So if you look at the BIS report in 2022, it stated that you have more than 1 trillion worth of Start risk lying around the world.
Yeah.
The BIS is certainly highlighted as an area of focus, and henceforth, central banks have come out with risk mitigation issues, a risk reduction mechanism. For example, the ability for parties to net the exposure, putting in collateral mechanisms such as variation margin, collateral credit support documentation, variation margin CSA.
Yep.
And I think that's one of the tools. The other tool is to look at how do we reduce your settlement cycle. So there's an accelerated settlement cycle initiative. As we speak now, on the 27th of May, US securities will move from T+2 to T+1. The FX settlement will also have to follow suit. So in the UK, there's a task force right now looking at it. How do we move from T+2 to T+1 by 2027? And a number of countries are following suit.
Yeah.
So I think that goes towards showing that, look, this is still a problem in terms of too much exposure out there. How do we reduce it from a legal perspective by putting on contractual documentation and ensuring that settlement finality, is certainly something that needs to be ironed out in some countries, and ensure that parties do not have an issue with respect to payment and settlement finality.
And finality ultimately is the number one fear of everybody that transacts in the foreign exchange market.
That's correct. You want to make sure that when you settle, you don't have to look back and think about whether the trades could be reversed, could be clawed back. And I think the certainty does foster increased volumes and flows of trades. And certainly this is a key area of focus from both the public and private sector as well.
Yeah. You mentioned the move to T+1. It's seen as actually being quite a challenge for Asian counterparties. I myself are based in Australia, where a lot of funds go, hang on a second, I have like 3 hours or so. I mean, is there also a move around Asia to actually change the framework there?
Yeah, but you look at Asia, it's like, for example, it's China, and some of the exchanges is already T+0.
Right, yeah.
And in India, they already moved to T+1. And so in some parts of Asia, the sort of a breached settlement cycle, it's already happening. I think the issue lies with, especially in the US, when you move to T+2, T+1, the compressed settlement cycle, FX settlement cycle, is something pose a challenge, potentially a challenge as we move towards the transition in May.
Yeah.
But I do think that some parties are more prepared than others, ensuring that you either pre-fund some of your trades, or you get your PB banks or your custodian banks to perhaps hedge the exposure with respect to shortened settlement cycle.
Yeah.
I think the jury is still out there when we look at post 27 of May, whether this is a huge problem for the market or a storm in a teacup.
Yeah, it's definitely something we will have to go on a day-by-day basis, it strikes me,
Exactly,
to actually work it out.
Yeah.
Now, a lot of the solutions that people suggest for accelerated settlement and reducing Start risk are technology-based. Obviously, technology comes with its own risk, but it inevitably leads us towards blockchain, distributed ledger technology, and then digital currencies. I know you study that framework a lot, and we should stress that these are actually your views, as an expert in our field. Where are we with that sort of digital currency, blockchain technology integration into our markets, and what hurdles do we face?
Yes, and I think when we look at the blockchain itself, the technology in itself is something that both private and public sectors are interested in
Yeah.
as an enabler towards faster, cheaper, and real-time settlement. However, I think there are two things where regulators are concerned about. With respect to the use of public permissionless blockchain, it's still untested from a settlement finality perspective, because if you do a trade on a Bitcoin, when do you actually have settlement finality remains a question. Right? Contractually, parties could agree, but operationally, do you actually know that you have settlement finality? The second part to that is that the technology where it is used to move, sort of internet value or money, or asset bank value, for example, for remittances like stablecoin, that is certainly that regulators and banks are interested in, because the movement of money or money like asset-backed stablecoins that is fiat-based and backed on par by the underlying asset, whether it's currencies or assets of value, is certainly parties are very interested. Because why? Because if you look at increasingly the digital settlement of things, you need a digital form of money.
Yeah.
And henceforth, when we talk about tokenization, when we talk about settlement on a blockchain, you need a digital form of money. You can't have one leg that is on a blockchain and the rest on an analog or offline. That doesn't work.
But does that also mean, though, that one of the challenges we may face is actually getting the technology to be quick enough and maybe robust enough to handle the sheer volume of transactions that take place in, for instance, the foreign exchange market?
Yes, I think there are a couple of initiatives out there. In the UK Finance has initiated a consortium under what we call a regulated liability network with a number of banks to look at a private permission blockchain. How do we create sort of a settlement layer or unified ledger to settle those trades? In Singapore, the MAS is leading Project Guardian, looking at layer one. And I do think this initiative goes towards how do we build an ecosystem that is sustainable, where trades could be done with legal certainty. We also address some of the concerns with respect to scalability, speed, and cyber risk as well.
Yeah, I mean, it's a fascinating phase of our evolution, it strikes me. And I guess just finally then, John, this is something that has to be done a bit like the Global Foreign Exchange Committee we had earlier on our panel over there. It has to be done on a public-private partnership basis.
That's correct. I think regulators are aware that they can't do it themselves, right? They need both public and private sector collaboration. I think the key point is to work towards what we call a sort of a collaborative evolution. And I do think that it's important to adopt a technologically neutral approach from a policy perspective, and let the innovators in the private sectors sort of go lock in step in terms of how do we get this together to work, right? Like any technology, look at internet many years ago, there were concerns that we couldn't use internet for banking. Look where we are right now. We still have concerns, but we have overlay that with security, 2FAs, online verification, and I think technology over time would get there. So the question now is not a question of if, it's a question of when. And I do think you're better off being involved than being excluded from it.
Yeah, definitely. I couldn't agree more.
Yeah.
John, thank you for taking the time.
A pleasure.
To give us your insights. Always lovely to hear from you. And hopefully we can do it again soon.
Likewise. Thanks
a lot.
Colin.
Cheers.
Thank you, sir. Appreciate it.
Thanks.